Good evening and welcome to Context. I'm Katie Wilson. As traditional powerhouses continue dominating global finance, alternative visions are emerging among leading developing nations. The D-8 Organisation for Economic Cooperation, featuring Turkey, Iran, Pakistan, Bangladesh, Egypt, Indonesia, Malaysia and Nigeria, is spearheading a novel cross-border payment system. This system aims to ease international trade by enabling settlements in local currencies, challenging the century-old dollar supremacy. For nations facing sanctions, currency instabilities and access limitations, such a mechanism could rechart financial destinies. But does this initiative hold water beyond its political allure? Joining me today from Istanbul to assess the system's merits and the hurdles it faces and to consider its broader implications for de-dollarization is D-8 Dirijan. Thanks for joining us, D-8. Now,
welcome. Hi, everyone.
Thank you. Now, in a practical sense, break this down for us. In everyday life, how would this new system work?
In general, usage of that type of single payment systems are for the benefits of all countries. Why? We should ask to ourselves two main questions. For example, the main question should be like that. Why we are using another currency which is at least 10,000 miles away from my country and my neighbor country? The first question could be like that. The second one should be how we can do it. So how we can use or how we can establish that single payment system. The first question, when we want to answer it, the trade among the 8 countries, the volume is nearly $1 trillion in a year. But when I say dollar, it could be a reporting unit, or it should be a reporting unit, not the tool itself. So dollarization is a big problem that we are living in Turkey, for example, nowadays, or as long as I remember. So dollarization is a big problem for emerging economies, emerging countries. And in every case, when you do trade with another country, you take their country risk, their counterpart company risk, and their currency risk, as well as their volatility. And also your intermediary banks' fees and commissions, as well as credit line, loan problems, as well as together with the country, the CDS premium problems. So in every case, you take all that type of risks. Why to take another risk such as foreign exchange parity or volatility, i.e. in that case, we are talking about dollarization. And after the Trump's, for example,
but hang on,
new tariffs and
what about the
taxes,
feasibility of this between these 8 countries? How feasible is this to implement?
It will be very feasible because when you implement such single payment system, first of all, you eliminate in the long run the transfer costs and also the maintenance costs. And plus the volatility against other currencies like dollar or euro, you eliminate that type of volatilities. So you, in the long run, for the banks, for local banks, and for the, let me say, D8 countries, commercial banks, it will be much more easier to, when you open lines for Turkish lira or for Azerbaijan currency, for example, for example, Pakistan currency, when you open lines among commercial banks, it will be easy for those banks to manage the local currency risk because you eliminate the other base currency. Of course, at the end, you have the base currency risk, but as I previously tried to explain, in every case, you take the country risk, in every case, you take the company's risk, etc. So those risks are all included. So when you eliminate the other currencies like dollar or euro, you are together face to face with your counterpart. So you eliminate that type of volatility risk, and it will open new credit lines among the neighborhood countries' banks, commercial banks, as well as you can, for example, establish new lines new lines in your Exim banks, among your Exim banks, for example, export-import banks. You can, for example, create new, for example, agreements or that type of things among your government banks and your central banks. For example, you can easily open swap lines among your central banks. So it will eliminate a lot of, let me say, transfer cost as well as volatility risk management type of cost together with the value of your currency. So the cost of the value, which is the time value of money, which I call interest rate, you eliminate also that type of risk at the long run. But in the short run, you have to do some things. For example, opening new correspondent agreements, doing new correspondent agreements, opening new credit lines among your banks, opening, for example, nostro-vostro accounts, and making new agreements among central banks, Exim banks, etc. So it will take some, let me say, some times, but in the long run, you will feel the importance and the, let me say, the advantage of the system.
So something that you're touching on here is how local financial institutions will adapt to this emerging framework for trade settlements. Do you think all of these 8 countries have the infrastructure to support this and support this shift away from systems we're used to, like SWIFT?
It will take a little bit time because, for example, in Turkey, we also integrate our banking system to SEPA, Single European Payment Area. For example, we are using IBAN codes, which means International Bank Account Number. So you should implement that type of technological, let me say, or legal, let me say, requirements in your banking system or in your financial system. So it will take a little bit time. But for that type of payment systems usage or implementation, for example, the participators, the countries that want to participate that type of payment systems, they take a little bit time. So it is a project management. So you have some deadlines. And when you, for example, fulfill your obligations and fulfill your deadlines, it means that you can easily integrate yourself, your country, to that payment system. So it will take a little bit time. Yes, you have to make some small implementation cost for the banking system, ERP system, accounting system, but in the long run, like Euro, for example, like SEPA area, Single European Payment Area, you have a lot of gains eliminating the other currencies from your trade.
Tell me more about this. What industries could benefit most from something like this?
All the industries, I can say, all the companies. Why? Because when you eliminate in the long run the money transfer costs, the cutoff times, for example, the dates are important when you make a money transfer, because if you cannot, for example, fit to a timeline in a day, for example, so overnight you use the interest rate. You lost the overnight interest rate. So the cutoff times are also important in that type of banking system. So when you eliminate by using or by creating a new payment system, when you eliminate cutoff times or transfer cost, it means that it will be less costlier for companies companies that wants to make trade among countries, and also it will open new, let me say, credit lines or new loans opportunities among the banks as well as for the companies as well. So the Exim Bank also will play a vital role in that scenario, and it means that in the long run, if you have, for example, local currency in your bank, okay, in your home bank, it means that you can open easily a credit line to the counterpart to the counter country. So that type of new establishing, for example, loans or credit limits, it will also boost the trade among the countries. And also, when the maintenance cost also will decrease, it means that you will, for example, transfer money to another country less costly, which means your operation in your company also will decrease. And also it will be much more secure, for example. And for example, in the long run, for example, nobody wants to face a scenario like this. But if you have sanctions, for example, like we have seen in Russia case, for example, you can easily eliminate that type of risks as well as the financial frauds. Because when you look at the SWIFT system, for example, why we are using SWIFT system? Because it is also secure. You have at the end some special codes, some special controls.
Can I pick up on something?
Payment system will also do that.
Can I pick up on something you're saying about risk? Is there not a potential risk to pegging trade to these local currencies, especially in the light of varying economic stability among these member states?
So this is the basic question: to whom you want to make trade, or to which country you want to take the risk? Do you want to take the risk of Mr. Trump's country, or you want to take the risk of Turkey's? That's the question. So by pegging the local currencies, yes, at the end, the economy will play also a big role, because, for example, if Turkey's economy, for example, has a problem, for example, you can also see it in the currency, in the volatility of Turkish lira. But in every case, for example, nowadays, you can see the same risk in euro-dollar parity as well.
Do you think
the main idea behind it is the same?
Do you think this initiative is as much a geopolitical statement as it is an economic opportunity?
It's an economic opportunity, but at the end of the day, for example, Mr. Trump told that, and also threatens economies like countries that trying to get away from dollar, for example. So he threatens also the economies against the dollarization. It could be also a political, international, let me say, barriers. That could be. But in every case, you have to find a solution, because nowadays, this is the first question at the beginning that I try to, let me say, answer or try to make an emphasis on it. So the dollarization is a big problem for emerging countries, and nobody feels safe in international economies or in financial markets nowadays because of the sanctions, because of the tariffs, because, for example, IMF regulations and bureaucracy are very slow when you want to help to a country. That's why central banks are using swap lines, for example. You have already the parity problems and the volatility in base currencies like euro-dollar parity. And also, when we look at the Federal Reserve, for example, in the last 2 years, the Federal Reserve banking system, the central banking system of the United States, they are making huge losses together with the United Kingdom, together with the European Central Bank. And when we look at their treasury side, for example, because of the treasury debts, they can go bankrupt, which means don't look to their countries, for example, credit rating agencies notes. They are not showing the real, let me say, situation. For example, that's why we are, for example, living nowadays the tariffs and the tax of United States, because they have huge deficits in their treasury, in their budget, or in their current account, for example, in their balance of payments. That's why we are facing that type of problems. That's why we have, for example, problems with the price of the golds nowadays, or we have discussions among countries against tariffs and taxes. So you have to eliminate that type of costs in the long run. So you have to find a solution. And for the short term, it could be a problem, or it can be seen like a problem for United States or for base currencies, but in the long run, they will also help them to eliminate their costs and their risks.
So it sounds like this push for de-dollarization is massively significant here in terms of gaining support for a system like this. But beyond these official endorsements, how do we know that each country is genuinely committed to supporting this cross-border payment system?
If European Union countries can do that with 28 countries, so the 8 countries can easily do it the same, I think.
And what are the safeguards that we need when
As an ex-banker, I am saying, I'm not only an academician, I'm an ex-banker, and also I worked in foreign trade operations as well, so I know SWIFT very well.
So tell me, with your experience, tell me what key safeguards do you think is needed to prevent currency imbalances or manipulation within a system like this? You've touched on this briefly, but tell me more.
Yes, but in every case, speculation, it's not the problem. This is the, let me say, the situation of the financial markets. Okay, speculation should be in every financial markets. The problem is manipulation. But if a country wants to manipulate its local currency, they can do it today also. Nobody can stop it. So that's why, for example, Mr. Trump called China as a foreign exchange manipulator for renminbi, for yuan. So in his first presidency, for example, the United States Treasuries also called China as a foreign exchange manipulator. So if a country, it is like that or not, that's not our question. But if a country wants to do that, it can do it together with dollars or together with the local currency. So nobody can eliminate that type of risk. But if you want to eliminate other and more risk that you are now facing or you are living, you have to find new ways like single payment systems or making trade with local currencies. It will take time. And in your banking system, in the first rank, you should do some homeworks, but in the long run, everyone will make profit from that, including the base currencies countries as well.
Do you think there's any lessons that can be learned from previous attempts at alternative payment solutions like these? And how can, when we're talking about this system, how can they apply these lessons?
When you look at the Euro case, I think that's the main case, and that's the, let me say, a case study and also a, let me say, best practice for everyone. So if they can do it, everyone can do it. So you have to make your standards first of all. And after that, when you make, for example, your payment system, a single payment system, you cannot only use it for only money transfer, you can use it for credit card clearance as well, or for securities, for stock exchange type of, let me say, clearance or settlements as well. So this is the first, let me say, initiative that you are doing. And in the long run, you have to look for other type of things. You have to invest it, and you have to, for example, you can have some bottlenecks during the project management, but if still, when we look at the case study of European Union, if they can establish SEPA, if they can establish, for example, IBAN codes, international bank account number codes, and if they can, for example, easily use, for example, that single payment system towards, for example, Euroclear settlement company. So the 8 countries as well can do it, I think, in the very short time.
So to finish off, we're running
because when they established the SEPA,
Mr. Dirijan, we're running out of time. So I just want to ask you one more thing. Tell me, in order to make this a success, what are the key things that need to happen?
First of all, agreements among central banks, establishing swap lines against among central banks. After that, try to make new agreements among government banks, including export-import banks, which means ECA credit lines. After that, including the commercial banks in the system, and opening new credit lines, opening Nostro-Vostro accounts among those commercial banks. After that, the technological part came. So the technological part will play also importance, but I try to give that example for the European Union single payment European area. It was 2000 when they established that payment system or that system. now we have, let me say, a lot of improvement on the technological side. So we can easily implement a technological solution when we want to establish such a payment system.
Really interesting insights there. Thank you so much for joining us on Context.
Thanks a lot. Bye.
Now, as the D-8 nations pivot towards reshaping regional trade through localised currency settlements, the initiative's viability remains both a bold opportunity and a challenging test. Analysts are weighing not just the economic potentials, but also the practicalities of implementation. That's all from us on this episode of Context. Thank you for watching.